Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms. Chapter 4, Admission of a Partner. And in this video, we will study questions related to preparation of revaluation account, partners' capital accounts, and balance sheet. So we will see question number 71, and before that I would like to tell that if you find the video interesting and informative, please like it and share it with your friends. That motivates me a lot to do the best for you. So let us see question number 71. Deepika and Rajshri are partners in a firm sharing profits and losses in the ratio of 3:2. On 31st March 2023, their balance sheet was: to the liability side, we have got sundry creditors rupees 16,000, public deposit rupees 61,000, bank overdraft rupees 6,000, outstanding liabilities rupees 2,000, and capital of Deepika 48,000 rupees and Rajshri rupees 40,000. Grand total is 1,73,000. To the asset side, we have got cash in hand rupees 1,200 and cash at bank rupees 2,800, stock rupees 32,000, prepaid insurance rupees 1,000, sundry debtors rupees 28,800, less provision for doubtful debts rupees 800. To the outer column it is 28,000. Plant and machinery rupees 48,000, land and building rupees 50,000, and furniture of rupees 10,000. Grand total 1,73,000. Now further in the later part of the question we find: on 1st of April 2023, the partners admitted Ashu as a partner on the following terms. New profit sharing ratio of Deepika, Rajshri and Ashu will be 5:3:2. Ashu shall bring in rupees 32,000 as his capital. Ashu is unable to bring his share of goodwill. Partners therefore decide to calculate the goodwill on the basis of Ashu's share in the profit and capital contribution made by her to the firm. It means valuation of goodwill we have to do here, and here it is hidden goodwill. So the concept of hidden goodwill we have to apply for calculation of goodwill of the firm. Plant and machinery is to be valued at rupees 60,000, stock at rupees 40,000 and provision for doubtful debts to be made at rupees 4,000. Value of land and building has appreciated by 20%. Furniture has been depreciated by 10%. Then there is an additional liability of rupees 8,000 being outstanding salary payable to employees of the firm. This liability is not included in the outstanding liabilities stated in the above balance sheet. Partners decide to show this liability in the books of accounts of the reconstituted firm. So there is a new liability to be added. Prepare revaluation account, partners capital account or balance sheet of Deepika, Rajshri and Anshu. So let us see the solution. Solution 71. Here it is written plant and machinery to be valued at rupees 60,000, and in the books plant and machinery is of 48,000. So there is increase in the value of an asset. We know that increase in asset or decrease in liability we have to record on the credit side of revaluation account, and decrease in asset or increase in liability is to be put on the debit side. So plant and machinery value is increasing. Plant and machinery, and it is increasing by rupees 12,000 from 48,000 to rupees 60,000. Difference is 12,000. Then stock is also increasing. So by stock, it is said stock is valued at rupees 40,000, whereas in the books stock is shown at rupees 32,000. So the difference with which the stock has increased is rupees 8,000. Then a provision for doubtful debts is to be created. So it is a liability. Provision for doubtful debts. 4,000 rupees, but 800 rupees is already there in the balance sheet. So 4,000 minus 800 is 3,200. So the load of 3,200 will come here. Then building has been appreciated. So increase in asset. So by building 20% of the book value, 50,000's 20% is rupees 10,000. So with this amount, and furniture is depreciated. So decrease in asset to furniture is decreased by 10%. So 10,000's 10% is rupees 1,000. I hope that you are very comfortable with calculations and all, because if I start making calculations here, then it will be too lengthy and it will be very boring for most of you. So that is basic mathematics class 8, I suppose, means only plus minus multiplication division is there. So therefore I am putting the final figures here, and in the explanation you can understand how these amounts have come. Now we will add this, and grand total here is rupees 30,000. We have a credit balance. You see the credit side is heavier, and the balancing amount is rupees 17,800. So credit balance is a profit. So there is a profit on revaluation, and it will be given to old partners in their old profit sharing ratio, Deepika and Rajshri. So when we break this, the amount is rupees 10,680 and 7,120. So this is revaluation account. Now let us work for calculation of hidden goodwill. Hidden goodwill, because the statement in point C tells us that it is a question of hidden goodwill, and goodwill is to be calculated based on new partner's portion of profit and his capital brought. So that hint us that it is a hint that we have to calculate it. Hidden goodwill is there, right? So net worth with goodwill is based on new partner's capital, that is 32,000 rupees, and his portion of profit. Profit is profit sharing ratio of the new firm is 5:3:2, and his portion, new partner, who is new partner? Anshu. Okay. Anshu's portion is how much? 2/10. Anshu's portion is 2/10. And what will we do? To calculate the net worth, the actual net worth of the new firm, capital brought by Anshu multiplied by reciprocal of his share, that is 10/2. So it is how much? Rupees 1,60,000. And now the actual net worth. This is the expected net worth with goodwill based on new partner's capital and his profit sharing ratio. But actual net worth is the sum total of capitals of all the partners. So first partner Deepika's capital is rupees 48,000. Then Rajshri's capital is rupees 40,000, and new partner Anshu's capital is rupees 32,000. Now total of this is how much? Total of this is rupees 1,20,000. That is not all. Profit on revaluation also we have to add, because the benefit is going to be transferred to partner's capital account, and as a result this profit on revaluation will increase the capital balances. Therefore we will add rupees 17,800. Now the actual net worth of the firm is, when you add this, you get an amount rupees 1,37,800. Now the difference between these two is goodwill. We have already learned calculation of hidden goodwill in the previous chapter, so you can refer to the previous videos for this, and but the logic and the concept is here itself. When you subtract it, you get an amount 2,22,000, not 2,22,000, 22,200. Sorry, this is hidden goodwill. Now, how much is Anshu supposed to bring? Anshu's goodwill is equal to 22,200 into his portion, that is 2 by 10, and the amount is rupees 4,440, which will be given to the sacrificing partners. And because the old ratio and the new ratio of old partners are different, and therefore we will have to calculate sacrificing ratio as well. So the old ratio is how much? Deepika is to Rajshri is equal to 3:2, and Deepika is to Rajshri is to Anshu is given 5:3:2. You see, the ratios of old partners are not the same, and as a result we have to calculate sacrificing ratio, and we know that sacrificing ratio is equal to old ratio minus new ratio. So let us calculate for Deepika. Old ratio is how much? 3 by 5, and new ratio is 5 by 10. LCM is 10. It is 6 minus 5, 1 by 10. Fine. And for Rajshri, old ratio is 2 by 5 minus 3 by 10. So here also LCM we get 10. In the numerator we will get 4 minus 3, which is equal to 1 by 10. So because the denominators are same here, so the numerators are the sacrificing ratio, which is 1:1. So this amount will be paid, this premium will be given to the old partners in which ratio? 1:1. It means 22,220 each. Half of this will go to Deepika and the other half Rajshri. So partners capital account we will prepare by balance brought down, opening balances of old partners as given in the balance sheet, 48,000 rupees and 40,000 rupees. Then there is profit on revaluation, 10,680 and 7,120. The new partner will never participate in profit or loss on revaluation of assets and liabilities. New partners capital by bank or cash you can write 32,000 rupees. Then for not bringing goodwill in cash by the new partner Anshu, current account is to be opened. So by Anshu's current account, it is, and goodwill was of rupees 4,440, in which ratio? Sacrificing ratio, which is 1:1. So 2,220. So that is the treatment of goodwill not brought by the new partner. Now that is all, and now we will close it. Grand total here is 60,900, and it will become the closing capital balance for the partners. And here the grand total is 49,340. So this is how capital account is to be prepared. Now the balance sheet. So to the asset side we will write first cash of rupees 1200. Then bank. Very important here to note is that opening balance of bank is rupees 34,000, not. is 2800, and the new partner has brought rupees 32,000 as capital. Fine, but there is a bank overdraft given in the balance sheet of the firm to the liability side, and that is of rupees 6,000. So when we are having enough money in the bank, it is our responsibility to clear the overdraft. And as a result, because the money was not enough in the old balance sheet, therefore this overdraft was not cleared. But now when the amount is enough amount is there, this overdraft is to be cleared. So after subtracting this overdraft, the amount is rupees 28,800 bank balance. Then stock has increased by 8,000 rupees and now it is 40,000. Then prepaid insurance, as before, 1,000, no change in this. Then debtors are of rupees 28,800, and provision for bad debts we have prepared of rupees 4,000. So the amount is 24,800. Then plant and machinery, from 48,000 rupees it has come up to 60,000 as suggested in the question. Then land and building has increased by 20%. So from 50,000 plus 10,000 it is 60,000. Then furniture has decreased by 10%. So 10,000 minus 1,000 is 9,000. And because the new partner could not bring his portion of goodwill, Anshu's current account of rupees 4,440. This is a debit balance and therefore it will appear in the asset side of the balance sheet. Now you grand total it is 2,29,240. Now coming to the liability side, first we will write the capitals of all the partners. Deepika. Closing capital balance is rupees 60,900. Rajshri 49,340. Then Anshu is 32,000. So the total capital of the firm is rupees 1,42,240. Then bank overdraft, because we have subtracted it from the bank, we need not to show it here again. And sundry creditors, as before, it is 16,000 rupees. Public deposits, ₹61,000. They have accepted deposits from public, which is a liability. Then outstanding liability, or what is that? Outstanding liabilities, which is salary, as given in point E, 8,000 rupees. It is increasing by 8,000. So 2,000 plus 8,000 is 10,000 rupees. So this way the new balance sheet will be prepared for the new firm, and all the assets and liabilities are revalued here. Fine. Grand total here is 2,29,240. So it is very easy and it is very quick. If you practice, then you find that within 20 minutes such question can be solved. And saving time is all equally important. You have to get smart in calculations. Arithmetical accuracy is very much needed, and you have a good future prospects also. There are so many professional courses. For that, the preparation starts in school itself. Fine. So be very observant, read the question very properly and retain the information to solve the question, and your arithmetical accuracy has to be perfect. Let us see question number 72. Atul and Amit are partners sharing profits in the ratio of 3:2. Their balance sheet as at 31st March 2023 is as follows. Capital of Atul rupees 1 lakh, Amit rupees 1 lakh, total is 2 lakh. Current account Atul rupees 70,000, Amit rupees 50,000, total is 1 lakh 20,000. Creditors rupees 40,000 and bills payable rupees 10,000. To the asset side, we have got plant and machinery rupees 1,80,000, furniture rupees 30,000, computer rupees 10,000, stock rupees 40,000, debtors rupees 50,000, bills receivable rupees 10,000, cash rupees 10,000, bank rupees 40,000. Grand total here is rupees 3,70,000. Further, Abhay is admitted as a partner for 1/4 share on 1st April 2023 on the following terms. Abhay is to bring rupees 65,000 as capital after adjusting amount due to him included in creditors and his share of goodwill. So, new partner Abhay is our creditor also, and we have to clear his status as a creditor and convert him into a partner with capital. Rupees 10,000 included in creditor is payable to Abhay, which is to be transferred to his capital account. That is, it is clearly stated here that from creditors 10,000 rupees is to be converted into capital because this creditor Abhay is now a partner. Furniture is to be reduced by rupees 3,000 and plant and machinery is to be increased to rupees 1,98,000. Stock is overvalued by rupees 4,000. So we have to reduce it by 4,000. A provision for doubtful debt is to be created at 5% and goodwill is to be valued at 2 years purchase of average profit for 4 years. So 4 years profits are given to us and average profit multiplied by 2. Profits of 4 years ended 31st March were as follows. 2023 rupees 25,000, 2022 rupees 10,000, 2021 rupees 2,500 and 2020 rupees 2,500. Pass the journal entries for the above arrangement. So we don't have to prepare ledger, we have to prepare journal entries. So sometimes we find that we are very good at preparing ledgers and therefore we care not, or we are a little negligent towards preparation of journal entry. But journal entry is the soul of accountancy. In every part you will find, and therefore you have to be good at preparing journal entry. Fine, so let us prepare journal entries for all the transactions made during this time. Solution 72. First we will prepare or evaluate goodwill. Goodwill is to be calculated and it says that average profit multiplied by 2. An average profit of 4 years. So let us calculate average profit. 4 years profit is given to us 25,000 rupees, then 10,000 rupees, then 2,500 rupees and again 2,500 rupees. Fine. Whole divided by 4. So 25 plus 5 is 30, 40. It is 40,000 divided by 4 is 10,000. Therefore, goodwill is equal to 10,000 multiplied by 2, which is equal to 20,000 rupees. So this is the firm's goodwill, and the new partner Abhay. Abhay's goodwill is equal to 20,000 and he is in for 1/4 share in the profits. So his portion of goodwill only he will bring, which is rupees 5,000. And this will be given to the old partners or the sacrificing partners because they have sacrificed a portion of their profit to accommodate the new partner, that is in favor of Abhay, and therefore this will be as a reward, it will be given to the old sacrificing partners. And here we know that the old ratio is 3:2 and the new partner is coming for 1/4 share. Only this much information is given. It means they are sacrificing this portion in their old ratio. So it will be given to the partners in their old ratio, sacrificing ratio. Old ratio and sacrificing ratio are same here. So 3:2. So 3,000 will go to the first partner Atul and 2,000 will go to the second partner Amit. Now let us see the journal entries for this. So journal entries related to revaluation of assets and liabilities. So let us see revaluation account debit. Revaluation account debited. When is revaluation account debited? When there is decrease in asset or increase in liabilities. So which are the cases? Reading the question. By reading the question you will understand. So we find that some assets are decreasing, that is furniture. Furniture is decreasing by rupees 3,000. And stock is also overvalued. So stock also we will mention here. It is overvalued by rupees 4,000. And so that is assets have decreased. Fine. But one of the liability, that is provision for bad and doubtful debts. 5% of debtors. Debtors are of rupees 50,000. 5% of 50,000 is rupees 2,500. So this much only for, so we will grand total it 7,8,9,500. Then we will check for when the revaluation account is to be credited. So when is revaluation account credited? When assets are increasing and liabilities are decreasing. So here plant and machinery is increasing. Plant and machinery. From 1,80,000 it has increased to 1,98,000. So increasing by 18,000 rupees. That is all. No liability is decreasing. So that much only to revaluation. Being plant and machinery increased in value. Now the difference between debit and credit of revaluation account will give us profit or loss. In this case we are having credit amount is heavier. It means there is a credit balance. So credit balance is a profit which will be transferred to partners, old partners in their old profit sharing ratio. So the difference here is how much? 18,000 minus 9,500 is 8,500 profit. So revaluation account debited. So credit balance will be recorded in the debit side of revaluation account, and the difference is, as I stated you, 18,000 minus 9,500, that is 8,500, and it will be transferred to partners Atul and Amit. Now, because the question says that there is current account in the balance sheet, it means capital accounts are fixed. For that reason, we will transfer this profit to current account. In their profit sharing ratio, that is 3:2. So break this, and the amount is 5,100 and 3,400. 1,700 multiplied by 3 and 1,700 multiplied by 2, being profit on revaluation. Now journal entries related to Abhay's admission. For that, bank account is debited and creditors also, because Abhay is the creditor and now he is converted as a partner. So his amount rupees 10,000 as a creditor will be merged with his capital. So to Abhay's capital account. Abhay's capital account. And it is said in the question that Abhay is to bring rupees 65,000 as capital after adjusting an amount due to him included in creditors and his share of goodwill. So, and his share of goodwill, so to premium for goodwill. Fine. So Abhay's capital is rupees 65,000 after adjusting creditors of rupees 10,000, and he is also bringing his portion of goodwill, that is 5,000. So 70,000 minus 10,000 is 60,000. So 60,000 we will receive in bank. Now this premium is to be transferred to sacrificing partners. So for that, premium for goodwill account will be debited and closed, 5,000, and transferred to Atul and Amit current account, because capital accounts are fixed. Being treatment of goodwill in sacrificing ratio, which is 3:2. So these are the journal entries, and looking in the balance sheet, there isn't any amount to be distributed to the partners. So related to revaluation of assets and liabilities and admission of a partner, that is the entry we needed to do here. It was very simple and quick also. So I believe that you have understood the concept very well and you are watching all my videos sincerely, and I will suggest you not to skip the explanation part. Listen to the explanation. The details and depth of the concept is given to you. And if you are liking the video, then please like it, subscribe the channel and share it with your friends so that they can be benefited from this video. I know that you are very ambitious and there are many professional courses. In that courses, these preparation of yours will be very helpful. Thank you so much for liking, subscribing and sharing this channel. Thank you so much for watching this video.